Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Thursday, the 4th of January, 2024, 6:55 p.m. Central Time. We are swamped. We've had going on our year sale, our New Year sale, and it ends tomorrow. So if you want to get my research 40% off, you can choose from the morning subscriber video for futures. You can pick from the Spider ETF video. Put that out I start recording at 9. The combination of the two, you can pick together my full research, which gives you the morning futures video and my twice daily written reports. I think you'd find that super interesting because that's where all my trade ideas really come into. And then I execute part in the morning. The disadvantage to the morning subscriber video without everything else is you see it once. During the day, I'm able to send out updates as I get more aggressive in the markets and tell you modify positions, do that, but it's only with the full research that we do that. 40% off. You're going to find you can get these for, I'll give you an idea right now, about $8 a month. You heard what I just said. With the 40 off, you're about $8 a month. You think you can afford $8 a month to see 22 videos, each about 15 minutes long, all charts throwing ideas at you? If you can't, you're wasting your time with me. That's about what it turns out to be. Okay, it's pretty interesting if it's not the full research program, and the others are great. I think you'll like what you see. Okay, iraepstein.com under the word research, or click up here. Let's take a look now and see what we've got elsewhere. There we go. All right, so if we have another down day tomorrow, that would be 4 days in a row in some of the stock indices. If you go back and you look, when's the last time you started a new year where you had 4 days in a row? I was listening to CNBC talk about it today, 1978. What would it mean? Well, it certainly wouldn't be a very good start. What changed? Here's what's changed in the market. The data doesn't add up at this point for 6 or 7 rate cuts by the Fed. I know the market was super euphoric on caffeine, going crazy in December. November is normally the strongest month of the year, but it didn't stop there. You had very little consolidation in December, and you just ran. I did this. You saw me pulling these videos. I said, it's like a rubber band. You're pulling it, guys. At some point, you're going to let go, and the market's going to go with one of those. Well, you're in that right now. That doesn't mean you have to get bearish. In fact, the argument to get against getting overly bearish is you've got a powerful labor market. The jolts, 8.8 million jobs still out there for people to go get. We saw ADP numbers today up 30,000 from the estimate, 164,000 new jobs. In the challenger grade, the cutting of corporate jobs, nowhere near what the market thought. In other words, not cutting as many. I think they're down to 37,000 cuts from 45,000. And tomorrow we get the all-important jobs report, and the market is looking for 170,000 new jobs. Now, one of the things that we have to look at, obviously, how much of the wage is going up when we see that? Number 2, we should look at what's the employment rate. Is the market a surprise to the upside or the downside? That's going to be important. This one gets smoothed out a lot more in the next one in February because then we see the real layoffs from the temp workers and so on. But you've got to pay attention to what it does, and it will be the market mover tomorrow. At the end of January is when we get the FOMC meetings. So between now and then, we're going to get all kinds of PPIs and CPIs. Let them come into play. We have earnings starting in the stock market next Friday. So you're going to get the banks coming out, the big boys come in there. They'll give you an idea what they're seeing for the quarter. All eyes are going to be on it. You have your hands full. This is going to be an exciting month of trading. So buckle in is the best thing I can tell everybody. On the energy market, I said yesterday here that I didn't think that Israel was involved for a reason. They had 3 fronts. What do they need another front in a big war with Iran? And of course, Iran at first was pointing its finger logically. Let's call a spade a spade. They had every reason to think Israel was involved in that. And today, the Islamic State came out and said, no, we did it. The information given was wrong. According to the Islamic State, they had strapped on bombs onto 2 of their carriers. They're now in a better place, according to them, in heaven. And they destroyed, they killed 100 and some odd people, and they put 200 in the hospital besides that. Okay, I guess that's how you go to heaven. I don't get it. Okay. And that's where you're at with all this. So it's not that. And it took the oil, got up near $74 in WTI and right back down here. And that is the reason that it did it. Market had thought that was it. Maersk, the big shipping company, is trying again to route some ships through the Red Sea. My fear is one of them is going to, number one, get serious damage, number two, possibly sunk. Until the coalition can stop the Houthis, what are you going to do with that? I mean, if they keep launching missiles and drones, eventually one will get through. You can overwhelm the system, just fire an awful lot of them at one time. We've seen that in Ukraine. With all the great domes and everything we give them, if you fire enough, things get through. Okay. So when we take a look at the market, you're down 1.77% for the first part of the week. We finish off tomorrow. As I said, you've got for the first days, look at this decline. So if you're down tomorrow in an S&P, since 1978, you haven't done that. Does 1 week the bellwether of the year? You're not going to get me to buy into that concept at all. But it's important, and it takes out all, if you will, the huff in the market. And if you also take a look, we're already through mid-December lows. So you are getting a market that is giving you a reasonable pullback in it, which is needed. You need these to come in the market. You need to take the puff out of the market. You've got a pattern of a higher high and a lower low. Where am I looking for support? I'd say the 4,700 area, 4,685. If you can get down there, I think the Bollinger Band zone will prove to be the bottom of this break, if you can get down there. I don't have no idea what the report in the morning is going to do. You're already oversold. That is why I think if you get down there, there's not the panic. The market has been paying attention. If you're watching bonds and notes, they've been adding yield because they're looking at JOLTS, ADP, Challenger Gray. Everything still looks pretty strong as they go through it. When you look at the NASDAQ, here too, you've had, look at the series of breaks. It's fitting right in. Isn't it amazing that the Magnificent Seven aren't so magnificent in the first week of the year, and people are already going, well, that's it, they're done, this is the rotation. Nonsense. Nonsense. I'll talk about that in the Spider ETF video. Then we get over to the Dow. The Dow has been the strongest of the indices. I know you heard me say that over and over. I was repetitive about it. It's where you base on that index, the Santa Claus rally, and then as I pointed out, January 8th is typically where you end another small cycle. And the market has held up much better than the other indices have. And the one that everybody wanted to own is generally the one that hurts you. Everybody can't wait to own the small cap stocks because that's the one that's going to be making up the differences. There's a reason they're small cap, and there is a reason that they're the laggard. And the reasoning has to do that they can't withstand high interest rates as much as others. And I haven't seen anything here that says the Fed's going to cut rates come March. Not anything. So far, all the reports, and it's Thursday. We only are open Tuesday, Wednesday, and Thursday so far. But the data that comes out, it's all circulating right now on one thing, and that happens to be jobs, and jobs numbers are strong still. Coming down, a lot of support waiting for the market back here from 1907, the lower Bollinger Band, to 1855. The 100-day average doesn't have to go there. It's a straight down decline, and it's one of size. You were just up here at 2096. Think of where you're at right now. You're over 100 points down from that number. When you come to the 10-year note, neutral. Oversold, neutral. Everything's going to hang tomorrow on what this jobs report looks like and how the market wants to react to it. In the 5-year note, you're starting to get a roll to lower highs, lower lows. So here was the euphoria. The Fed's going to cut. They're going to start in March. Maybe they should even start earlier if they could. And they're going to just keep cutting. Does that look like that's what they're doing? In order for that to happen, something bad has to happen to the economy. How does anything bad happen to the economy when everybody that wants a job can get the job at a good paying one on top of that? Nobody explained that, and they all had it wrong. They tried that argument last year. The argument hasn't changed. Now, what we'll see, because we're being set up, is next Friday, we start with the earnings reports, and that's where you've got to listen to what's being said, who thinks we're going to slow down, why they think we're going to slow. Do I think the markets can repeat in the tech sector, for example, the stellar gains they had this year? No. Do I think Carnival Cruise Lines, which is up 123% for the year, can do that again? Probably not. So we did a lot of things. We were at the back end of COVID, but now the game has to change a little bit. And that's how you look at it. In the dollar, a nice rally back to neutral territory, and you're instantly overbought. There's going to be trend trades that start setting up probably in the next week. I got to get ready for those. When we take a look at the eurocurrency, when you lost the embedded reading, you came back and you're fighting your battle right where I've said to you each day I thought it would be fought at here, the combination of the 200-day and the 18-day average of closes. The British pound peaked out last week at the upper Bollinger Band. It's gone back to neutral. What are the next things they're going to do? I don't think their bank has any idea what they want to do next. I'm talking their central bank. Difficult task. Bitcoin, it's all about what does the SEC do and when do they do it in terms of these ETFs. Trying to make heads or tails of the fundamentals, you're lost. In theory, January tends to drop that date for the SEC to approve or not approve and possibly be in violation of a court order on grayscale. I use the word possibly. I don't know what they have up their sleeve. I am certainly not a securities lawyer. I don't know that. So we'll see. Nor does anybody else, because you're just suddenly caught in this sideways action right here. Now, the differential between Brent and WTI, suddenly the differential's slipping about 20, 30 cents. I can't call that a trend yet, but it is slipping back. And probably because, in part, Israel wasn't involved in the bombing that just happened in Iran. That is a good thing, not a bad thing. When we take a look at the crude, do you think that's a trend you can trade? I didn't get last night's rally other than somebody thought that things were going to get worse, and you took all the air out of that today by falling back in the Brent once the Islamic came out, and they said that they had done it. Israel had nothing to do with this. Back over here, Israel's not so innocent, don't get me wrong, but they did not attack on Iranian soil Iranians on the anniversary of Soleimani's death. That didn't happen. When you take a look at heating oil, do you see they're all stuck at the 18-day average of closes? Now, the market that's surprised me in strength, that it keeps going up, is nat gas, but you're on borrowed time. You're over the Bollinger Band now 3 days in a row. You'll give it up. Be patient. You're not even close to embedding. Market will pull back inside of it. It does because it's an algorithm built to do that. So 5% of the time it can spend out of it. That doesn't mean you're not in an uptrend. And I'm not saying go short. I am definitively telling my followers I wouldn't be long over a Bollinger Band. Is that fair enough? All right, I'm going to repeat again. New Year sale. You're not going to get this for a long time. We don't have any big holidays coming up, so forget it. 40 off. Take advantage of it. We've had just now a sale on all the courses. IraEpstein.com under the word research. Give a click here. Remember, when you go in there, turn on the little button for the yearly subscription. When you put in your card and all and go hit that, you'll see the discount, everything appear, and away you go. I'm Ira. You have a good day.